Hey, happy Tuesday, everyone. It's Matt Donahue with Mission Financial Planners with your weekly market update. I have to apologize for not getting this out yesterday as I was traveling, but we're going to go ahead and we're going to get through it. So let's jump into our market moving news. Last week, we had a tech-driven rally. The S&P 500 and the NASDAQ both had big weekly gains to snap that three-week losing streak. Strong earnings from the tech companies helped offset some of the disappointment over the latest economic and inflation reports. NASDAQ was up over 4%. S&P was up nearly 3%. The Dow lagged, posting a fractional gain. We have a GDP slowdown, so U.S. economic growth still positive, but it slowed markedly from fourth quarter last year and was short of a lot of the economists' forecasts. As we all know, there's still elevated inflation, but GDP still grew at an annualized rate of about 1.6% in the latest period, which was down from a 3.4% figure in last year's fourth quarter. There's some earnings momentum, though. Near the midpoint of the earnings season, the earnings growth outlook has improved relative to last week. FactSet reported last Friday that analysts were expecting the S&P 500 companies to post a 3.5% first quarter earnings increase compared with the same quarter last year. And that's based on results so far and projections for companies that haven't yet reported. So just last week, the projected growth rate was only 0.5%. Inflation is sticky. So we've got a U.S. Federal Reserve meeting this week, and there's a report that came out on Friday that showed the Fed's preferred gauge for tracking inflation is still above 2%, which is their long-term goal rate. The Personal Consumption Expenditures Price Index rose at 2.8% annually in March. That excludes food and energy prices, which is essentially unchanged from February's core inflation figure and about a tenth of a point above what most economists were forecasting. Yields are up again. Yields of U.S. government bonds rose for the fourth week in a row. The two-year Treasury briefly eclipsed 5% on Thursday. Now, that's the first time since last November when the yield reached the highest level seen since 2006. The 10-year bond finished the week at about 4.67%. Anxiety's easing, though, right? The index that tracks investors' expectations of short-term U.S. stock market volatility recorded its first weekly decline of April. Maybe a good way to end the month, retreating from its highest level in nearly 6 months. And that's the CBOE Volatility Index was down about 23% from a recent high recorded back on April 15th. However, sentiment is souring. The recent trend of higher than expected inflation numbers appears to be weighing on the U.S. consumer as a measure of consumer sentiment fell, reversing courses of the following recent gains. The University of Michigan sentiment survey findings were released on Friday, and they were a big turnaround from March when the sentiment index climbed to its highest level in 32 months. Lots of stuff this week. We had a couple reports that came out yesterday, a bunch today, and a bunch the rest of the week. So we're going to see what the Fed talks about, but with everything going on with inflation, a lot of people are expecting the Fed's not going to make any changes, and we'll see what the April jobs growth report ends up looking like, because March had a bigger than expected gain of over 300,000 jobs. So yesterday, which was Monday the 29th, no major reports were scheduled. Today we have S&P CoreLogic Case-Shiller 20 city composite home price index. We have the conference board, or the NSA Index of Consumer Confidence. Wednesday, tomorrow, the U.S. Federal Reserve Board is going to conclude their two-day policy meeting, and Fed Chair Jerome Powell is going to hold a press conference. You have the ADP National Employment Report and the job openings and labor turnover survey of the U.S. Bureau of Labor Statistics. You also have the Institute for Supply Management's Manufacturing Index, and then construction spending from the U.S. Census Bureau. So a lot coming out tomorrow. Thursday, factory orders are coming out. Weekly unemployment claims are coming out. U.S. trade balance is coming out. And then on Friday, jobs and unemployment. We also have the Federal Institute for Supply Management's non-manufacturing index. So a lot of data coming out this week. The philosophy quote of the week, the theme is washing away the dust in life. And this comes from Marcus Aurelius. Watch the stars in their courses and imagine yourself running alongside them. Think constantly on the changes of the elements into each other, for such thoughts wash away the dust of earthly life. What he's getting at there is when you try to think big picture, look at the stars. And that's kind of the whole point here is if you look at the stars, you look at the universe, right? You're a pretty small part, or you're deeply connected to it. So there's a couple different ways you can look at things, right? But when you start thinking about the bigger picture, some of the things that you're maybe worried or stressing about maybe aren't quite as important as you might think they are. Tax tips. Let's talk about some deductions allowed when you do not itemize. There's really two ways to reduce your income on your income tax return. Um, you reduce the income tax you might be responsible for, of course, but those two methods are known as itemizing deductions or using the standard deductions. Now, a lot of people today are better off using the standard deduction, which is essentially a prearranged tax deduction the IRS allows taxpayers to claim on their tax returns, and that's based on marital status, among other things. If you're 65 and over and maybe you're blind, there's an extra $1,500 deduction for each, and those get added to the standard deductions. Now, some deductions are available without having to itemize and are called deductions for adjusted gross income. They're always better than deductions from adjusted gross income. So here's some tax deductions you can also deduct in addition to the standard deduction. IRA contributions. Now, there's certain rules allowing this deduction depending on whether you or your spouse are in a retirement plan at work and depending on how much income you earn. Self-employment retirement savings plans such as SEP, Keough, and Simple, student loan interest, tuition fees, self-employment health insurance payments where you can deduct 100% of the health insurance premiums and part of qualified long-term care policy premiums, and that does include Medicare insurance. That's for business owners, partners, or shareholders of S Corps. If you got divorced and your decree is prior to 2018, alimony paid to a former spouse is deductible. Health savings accounts, those are basically medical savings plans where you can contribute money for future medical bills and get a tax deduction for doing so. Self-employment, Social Security, and Medicare tax. The self-employed pay 100% of any Medicare and Social Security tax to the IRS, but then they get a 50% deduction on the front of their tax return as a benefit of being self-employed. If you're in the military, moving expenses paid because of a change in jobs, early withdrawal penalties from CDs, savings accounts, or life insurance contracts, educator expenses for supplies purchased for classrooms. If you're in the National Guard or a reservist, expenses for those of you who work out of town overnight. And a lot of these four deductions are going to have limits though. So just make sure you ask your tax professional what the limits are for this year. Feel free to give us a call too. We'd be happy to talk with you about it. Health tip of the week. This one's a little personal for me this week because the reason I wasn't able to post yesterday, I was attending a funeral, and 7 steps for managing grief and loss. So grief is something that's everyone's going to experience at some point, right? It just is. So having some ways, some things to do, to think about when you go through that, and we've all gone through that. First of all, you got to give yourself permission to feel the loss, right? It's okay to feel bad when you lose someone who's important to you. It's totally okay. It's normal to feel that way. Write a letter to the deceased loved one. Boy, that can really help just get some of your thoughts and emotions out on paper. And the best part is you don't have to send it to anyone, right? You can just write it and it just helps you get stuff out. Speaking of writing, maybe journal about some of the positive memories or think about the positive things that that person represented to you. If none of that works, talk to someone, right? Talk about your feelings. And it seems really simple, but if you can get it out there, it can really help you feel better. And then remember as well, grief affects everyone. It's not, after a certain age, you don't feel it, or if you're a little kid, you don't feel it, right? Grief is something that everybody's going to feel when they lose someone who's important to them. And then be supportive. When someone else loses a loved one or someone very important to them, just be there for them, right? It's not telling them what to do. It's maybe just listening, right? And letting them, vent or, get it out to you. And then prepare for recurring grief. Stuff's going to happen, holidays, birthdays, anniversaries, whatever it might be, that's going to trigger a return of that grief. And that's okay, right? That's okay. Because if you know and accept that those things are going to happen, well, guess what? You're a little better equipped. Not saying it's going to be easy, of course, but you're a little better equipped to deal with it when it does. Those strong feelings do come back. So, not to end on a somber note, but that's our update for the week ending April 26th. As always, if you have any questions, feel free to check out the written version of this on our blog at www.missionfinancialplanners.com. And then, of course, check out our YouTube channel as well. Just go to YouTube, search for Mission Financial Planners. We're the only one that comes up. So thanks again, everyone. Feel free to reach out if you have any questions. You can always call us at 888-339-0093. Once again, 888-339-0093. Thanks, everyone.